We touched in an earlier video on ECB stimulus last week, in particular negative interest rates. Can you elaborate on what that means and broader impacts on the global economy?
Yeah, it basically means we've got free money. We've had free money for a long, long time. Whether it's, plus 0.5%, 0, or minus 0.5%, which none of us can really comprehend. Basically, it's free money. The world has got free money out there, especially in Europe, and it's really quite bizarre to understand because we've got, say, the DAX at all-time highs. We've got Europe in an absolute mess, to the point where the ECB has said negative interest rates. They're forcing the banks to lend money to try and stimulate activity, and yet the stock market is pricing in perfection. Interesting scenario. Obviously the US interest rates are rising. They're starting to pull back their stimulus. And then finally the big wild card for me is China. China, I think, is what's hurting Australia. China's now, there was reports in the FinView today, property prices down 25% in certain cities. Yep. That's a big move down. And China's been trying to prop up the property market, stimulate it a bit, but it's a very different dynamics there at the moment. What happened the last pullback in 2011 was we had people going out, the Chinese were going out, looking for ways around the rules to buy 2 or 3 apartments. It's not happening this time. At the moment, the China property market's a problem. And that's a real problem for Australia because it means iron ore prices go down. Iron ore goes down, it hurts our balance of payments, etc., etc. So if I get just BHP, it's not good for the country, and that's why our market is massively underperforming, and only people want to be in banks. Buy banks, walk away is what they're saying, and hey, you can't argue with it short term, it's working. I think it's a fool's play short term, a fool's play medium term, short term it's the way to be.
All right, and there is a dichotomy between US hitting all-time highs and trying to retract stimulus, and Europe, putting more money in the system. Have you got interest in being in either market, or are you just not interested in either?
Oh, I think that the American market's in a fantastic, maturing bull market. I think it goes higher in the next 2 or 3 years, but I think it is due for a 10% pullback. So am I happy to be in the US market? Definitely, I'd love to be in it, but not at these levels. Big difference. Europe, a little bit harder to pick. Our market, a lot harder to pick. Australia's all about stock selection, and I think, was it last week I said, sell Woolworths, sell Wesfarmers, and still buy the banks is a good switch. It's worked perfectly today. So even though I think some of these markets are getting pushed, individual shares, the banks are trading at 10% rich P ratios compared to history, people are still struggling for places to put that money. You've got free money burning a hole in your pocket, it's got to go somewhere.
Yep.
So yeah, it's a very interesting quandary, and every day you can have a different opinion.
Yeah, look, great. Thanks, Sean.